Good morning, good morning, good morning. It is Thursday, the 9th of April. This is the Morning Blast with myself, Ryan, and of course, Michael, the very, very candid market related podcast where we shoot the shit, call out wrong uns, give a bit of a breakdown on market action and levels to watch, courtesy of our good friend Clark over at Futures Text. And just talk about what's going on today and what's to look forward to. And at the moment, Middle East updates seem to be top of the page on most days. But as usual, nothing discussed on the podcast is trading or investment advice, yada, yada, yada. Michael, how are you?
Indeed, very good morning to you, Ryan. Good morning, everyone. Very happy Thursday. Excuse me, not too bad at all, although I am slightly red and tomato-ish this morning. My rather thin Barnet not doing me any favours while outside the oyster shed last night.
Yeah, I too went for a walk along the beach yesterday and I got a little bit pink first day in the sun for moi, but then I am, usually the shade of a toothpaste. So there's no surprise there.
Were you in your little pink shorts as well, or have they been retired now?
Little pink shorts and some boat shoes, you know me. Yeah.
I do apologise to any of our listeners if they're listening to this over their breakfast this morning.
Haute Couture Ryan, they call me. Anyway, we'll get cracking. Obviously, it is day 2 of the ceasefire. Full day 2. Technically, it's holding, though. Strait of Hormuz is still functionally still closed, but we'll come on to that a bit later. Before we do, let's get an update on the market action and levels to watch via, as I said, our good friend Clive Lambert over at Futures Text. Equity indices held on to yesterday's gains in the main. S&P futures rallied to just shy of 68.50. 68.85 is the next resistance target, and 67.50 is now the Marabouzu support. Nasdaq futures didn't quite manage to close above 25,055, dropping back from big resistance around 25,200 to 250 marks. DAX is now back to its 200-day simple moving average and a fib level at 24,150. FTSE is sitting between 10,526 and a half. That half is all important. That's the gap support. And 10,920, the all-time high from late February. Bond futures also gapped up yesterday and still north of the gap support at 125.73, but a move above resistance at 126.26 wasn't sustained. Same with T-notes, 111.14 is the figure there. It got up to 111.21 where sellers returned. Euro-dollar got up to 117.22 before pulling back and is now back below its 200-day simple moving average this morning as the dust settles for now. Cable back below its 200-day simple moving average at 134.12 after finding sellers at 134.84 yesterday. Gold, the yellow metal, topped out at 4,888 overnight yesterday and has since tracked back to 4,718 overnight. Silver also gave back much of yesterday's overnight gains. Palladium did not hold on to its gains and now 15.27 is now the Marabouzu support in that one. London Copper, Dr. Copper gapped up yesterday, has now breached a downtrend line that has been defining things of late. So that should cheer the bulls and Ryan. Brent crude got down to 90.40 yesterday where buyers stepped in as bid this morning, still watching 91.66 as support, then 98.26 and 102.71 to 85 on further gains. Gas oil, that found buyers at 1,070 and a quarter yesterday. When I say a quarter, that's 25 cents, and recovered from here, but has a big gap above at 12.16 and 12.92 and 50 cents. TTF, European gas, that gap down yesterday on the news and spent the day below 46.53 Fibonacci level we've been watching of late. EU carbon markets didn't sustain its early bid yesterday and is still looking lower after failing at a big Fibonacci resistance recently. Corn over in the US, that's US corn, not that crappy French Matif corn. This is CME corn. A lot of people think, what the fuck's Matif corn? Exactly. The corn posted...
Clive might prefer that.
Pardon?
Clive might prefer that.
He does like the European commodities, so yeah, very much potential. But he's quoting CME corn or CBOT corn, whatever you want to call it nowadays. Corn posted a hammer candle and soybeans staged a solid recovery from a low of 1,140 and 4 getting up to 1,164 overnight. And that's it from Clive. Thank you very much, Clive. Futures text. What's in Twitter? Oh, yeah.
Well, Clive's just got the joke that went over your head. So.
Oh, yeah, clearly. Yeah, I forgot that. Yeah, Clive's new bird is French. There you go. She's a lovely lady. I've met her. Like, surprisingly,
Why are you surprised she's so nice?
Because Clive.
Well, yeah, true.
Clive is seriously punching. She's a lovely, lovely girl. I'm gonna hand over to you because I'm gonna get into a lot of trouble if I carry on talking.
Well, I was going to say, I think you better have a ceasefire with Clive on that front, and we can talk about the ceasefire in the Middle East.
Clive.
Where are we this morning? As Ryan, you rightly said, day 2 of the ceasefire. What is it? Day 41, I think, of the conflict itself. And technically speaking, the ceasefire seems to be holding, at least as far as the US are concerned. We heard from Vice President J.D. Vance yesterday, who was saying that, well, I'll quote him, "No ceasefire ever goes without a little choppiness," was the way that he was framing developments yesterday, whereas the Iranians using somewhat punchier language, noting that the ceasefire had been what they called violated. And this all centres on what's going on in Lebanon. Now, throughout the entirety of this conflict, let's be honest, we haven't mentioned Lebanon particularly much. What's been going on over the last kind of 3 or 4 weeks is effectively 2 wars. We've had the US and Israeli strikes on Iran and the various Iranian retaliatory attacks on infrastructure within the Gulf. But at the same time, Israel have been conducting a military operation in Lebanon involving ground forces, trying to expand the security buffer zone, and also various air and missile strikes as well, which is all to do with Hezbollah, of course. Now, the ceasefire, there seems to be a bit of confusion, and to be honest with you, I'm not entirely sure who is correct on this front. According to the US side, the ceasefire that was announced very late on Tuesday by President Trump had basically nothing to do with Lebanon at all. It was purely to do with the US-Iran conflict. You know, what's going on between Israel and Lebanon basically is a separate issue that can be dealt with in the fullness of time.
To quote Trump, he actually referred to it as a, quote, separate skirmish.
Exactly that. Whereas the Iranians very much kind of viewing this as one and the same thing. Obviously, you've got this whole idea of the axis of resistance. You've got the Houthis in Yemen. You've got Hezbollah in Lebanon. They're all basically Iranian-backed militias. And the Iranians are kind of viewing this as, well, hang on a minute. If you're attacking Hezbollah, you're technically still attacking us, which means that there's no ceasefire. There's a lot of hot takes. There's a lot of spin. And, everyone is trying to kind of pitch this for their domestic audience. I think the most kind of significant point for me is that despite all of the commentary that we've heard from both sides, as of 20 to 9 on Thursday morning, there are still talks planned in Pakistan this weekend. The Iranians are due to attend. The US delegation led by Vice President J.D. Vance is due to attend. As long as that remains the case, I think a lot of what we're seeing in terms of the ceasefire is, political posturing, for want of a better word. The market, I think, is very much, certainly from a risk perspective, with equities staying underpinned after those chunky gains that we put in yesterday. I think the market is basically saying, the signal is you guys are still going to talk regardless of what you're saying publicly about the ceasefire. And as long as that remains the case, then risk should be underpinned to a degree.
Yes, certainly, because it's worth highlighting that it's not just Iran that are saying that Lebanon is part of this ceasefire deal. It's actually Pakistan, who are the mediators, are also saying, well, hang on, we were at the table and it was clearly mentioned that Lebanon was part of this. So it seems to be just the US that are kind of saying, oh, no, it's completely separate. How much of that is the fact that, the US now can't actually put Israel on a lead and Israel just going ahead and doing it anyway, and Trump's there going, well, fuck, well, we're just going to have to say that it's not part of the deal. Obviously, as you said, it's the talks are scheduled for Saturday. There are significant gaps between Iran's 10-point proposal and the US's 15-point proposal. So if we can get down to the same number, at least that's that
would be a start, wouldn't it, guys? Can we just settle on like 13? Maybe it's halfway between the two.
Exactly. And the thing is, at the moment, it's so noisy out there. Headlines that we saw, like a report yesterday doing the rounds. FT sources, which I did flag straight away, was usual caveat applies, because FT sources recently on all topics have been fucking horrendous. They've had some horrendous howlers over the last few years on all manner of different topics, from central banks to individual companies to geopolitical news. So if you see an FT source, be careful what you're reading. But they were claiming that a drone struck this east to west pipeline that goes through.
Well, I think also, sorry, just on that very quickly, I think it's important. Yes, I agree. The FT have not been great throughout any of this, or really anything recently. But I think that's just a general rule of thumb that applies to any source's story. To be completely honest with you, the way I kind of like to liken it is, we often hear of an Iranian official or an Iranian parliament member. Would you trade the pound based on what a backbench Labour MP might say on Twitter? Absolutely not.
The thing is, it's a very nuanced thing, because some sources' comments you will trade on because the market will trade on it.
Yes, absolutely.
You've got to take in mind, what will the market believe. Sometimes I've made when I was back headline trading, some of the best during the floor, some of the best trades you'll make, they're bollocks, but the market's going to react to them. And that's half the game, right? But the reason why I wanted to single out FT is because people will see that it's an FT source, not some Iranian random person or some shepherd in a field that's seen something with his goats. They'll see FT and think that must hold water. Now, just because it says it's an FT source, what I'm trying to get at is it doesn't mean it necessarily is legit. And this FT source yesterday was drone attacks hitting this east-west pipeline going through Saudi, going over to the Red Sea. Now, if they did take that out, that would be a serious escalation, because that's how they're getting like up to 7 million barrels out of the region without going through the Strait. However, one thing to note, and this was picked up by, I think, one person, I think it was just Javier Blas or maybe Dr. Anis, was that this pipeline is actually buried underground. So don't think it's this pipeline that's running above ground across the desert. So, and there's been no other talk of this mysterious drone. There's been no information about, crude supplies being shut off.
Well, the other thing with that is it was actually a pumping station that they hit, not the pipeline itself, because, as you rightly say, the pipeline's underground, so you can't really hit it with a drone. But there we go.
But no, the damage that was inflicted, there's just so many nuances to a strike on a pipeline or whatever. So it really pays to understand what is being spoken about. Unfortunately, we get a headline, we get very little colour on that for some time afterwards, usually. But like we said, let's try and stay positive. A few ships went through yesterday, but they all seem to have gone through the toll booth route. Get your words out, Ryan. Put your teeth in. Which
I think that's the key thing.
Yeah.
If we go back to how we finished the blast yesterday, what a market's looking at right now. They're looking at the direction of travel in terms of, are we getting closer to a peace deal? Well, the talks are still on. They're still scheduled. They're still going to Pakistan. So reasonably, I think we can say yes on that front. Are we getting closer to, energy flows normalizing through Hormuz? Well, the direction of travel is the correct one. We're not back anywhere. There was an article on the Blue Mode terminal this morning that said something along the lines of, we're still miles off pre-conflict levels of transit through Hormuz. The ceasefire's been in place 24 hours, guys. You're not going to get 80 ships through on day one. Let's use a bit of rational thinking here. Yeah. Are the numbers ticking up? Yes, that's progress. That's a positive.
Yeah, I mean, exactly that. It's, we've got proof is in the pudding, to coin as many cliches as possible during one show. But also bear in mind that, Lloyd's war risk zone is still very much active. So, Lloyd's did, I think, record 3 ships yesterday, but I might have been 2. I believe we're still yet to see any loaded LNG carriers go through. Remember, even if we go up, say, move up to, say, 50 boats a day, right, which would be a massive increase, a huge increase from what we're seeing at the moment. There's still 800 odd boats that are kind of just stuck, and these don't include container ships. There's 50 odd sizable vessels in the Persian Gulf that are stuck. So just getting, just undoing the backlog is going to take weeks, potentially months to do that. And we're getting at the stage where, people can't ship, they're not producing oil, they're not producing energy because there's nowhere for it to go. Storage is full up, etc. And that's before we get onto LNG. The Qatari energy infrastructure that's going to take up to 5 years to kind of get back fully up to speed. Yes, we're seeing, and we saw a headline saying that, Qatari Energy, more Qatar Energy of sending some guys out there to kind of start bringing production back online. It's not going to be anywhere near the amount of production that was going on before the war. Also, if there's no boats ready to take it, they can't bring it out the ground anyway.
No, I think the market did actually overreact to that Qatar headline quite a bit. If you look at not only LNG prices, but also some of the stocks of US listed LNG producers, they were all off a cliff yesterday, basically on a report that said, Qatar is starting repairs. Well, yeah, but they've already said these repairs are going to take a hell of a long time.
Yeah.
It's not going to be, again, back to normal on day one. So, it's something that we obviously need to continue to monitor very, very closely. But I think it's, as of now, and again, this is subject to change, I think, we are still slowly but surely moving in the right direction.
Yeah, absolutely. One thing to note as well, as we said last week, that this week and going forward, we'll really start to see more information on the second round effects, such as fertiliser being a big one. There was a good map out. I'm trying to find it now quickly on Twitter. There's a good map out yesterday or the day before maybe from the FT talking about Bangladeshi and Indian fertiliser plants. Basically, nearly all of them at least partially closed. In Bangladesh, all of them are completely closed. And this is due to LNG disruptions. Let me see if I can put the tweet out that I did yesterday on this in the live chat. But, this is going to go on for a while because, not only was it like a third of world's fertilizer comes through the Strait, but the LNG that comes through the Strait also feeds fertilizer factories or manufacturing plants elsewhere in the world. So we're only a few weeks away from, planting season in the Asian subcontinent, which is, a few billion people, a couple billion people, and they could be doing it with a lot less fertilizer. Now, I think we're going to see this story kind of increase, and we could see, potentially like plays within like US fertilizer kind of prices and ramping. We're already seeing urea ramping higher, etc. But definitely something to keep an eye on. No, I'm not saying that shelves are going to be bare come autumn or something. But I am saying that prices quite possibly could keep going higher. There could be some very low yields out there. There could be some issues. There might be some strategic kind of food reserves have to be kind of dipped into. Interestingly, there's no what you would say a textbook strategic reserve for fertilizer. There's buffers. There's China, India, and they have kind of what you call like buffer stocks, but there's no what you would deem as a comparable to strategic petroleum reserve. So it'd be interesting to see how this plays out. It's definitely one to keep an eye on. And again, we're also seeing the helium aspects as well. So that's for chips, etc. And it's one thing turning on pipes and stuff back on in the Middle East, but there's a lot of secondary and tertiary impacts that are kind of really starting to filter through now. And one of those is what we can now quickly jump on, which is central bank reaction. What's your feeling on if we do hold this ceasefire for 2 weeks? Are we going to start seeing a change in language from central bankers like Fed, BOE, ECB?
Yeah, I mean, I think I actually don't think you'll hear much of a change from either the Fed or the Bank of England, because actually, if you look, Jay Powell was speaking last Monday, and he said that we're well positioned to kind of wait and see what happens next. And then, of course, we had Governor Andrew Bailey at the Bank of England saying last week that the market is getting ahead of itself in terms of pricing in rate hikes, and that's obviously the second time that he said that. So if they were saying that in an environment where energy prices were still moving higher and where there was still an active conflict going on, now that we're in a slightly more positive environment and energy prices have obviously come a fair chunk lower and there is this ceasefire in place, you'd kind of expect them to just repeat that rhetoric, really. There's no need for them to change. I think the interesting one is going to be the ECB. Because policymakers in Frankfurt have been getting a little bit overexcitable and a little bit ahead of themselves, I think, in terms of, talking about the potential for second round inflation effects, the need to be agile. I think Nagel, the Bundesbank president, was talking about the potential for rate hikes being discussed at every meeting from here on in. Even the sell side have been getting, overexcitable on this one. I think Nordea put out a call, I think it was about a day before the ceasefire was agreed, saying that they now expect 4 ECB hikes between now and the end of the year. So I think if we're talking about shifts in language, it's going to be the ECB that are the ones to watch the most, because they were the ones who became most hawkish on the way up in terms of energy prices. They're probably the ones who've got the most room to become more dovish on the way down if we do indeed now grind lower in terms of energy benchmarks.
Yeah, no, exactly that. Speaking of Nordea, I did see an ex-Nordea employee who shall remain nameless, but can be a bit of a twat, post a report yesterday that was reposted, hence why I saw it, because I'm blocked, because I called out his bullshit.
I'm blocked as well, sadly.
For saying that the Strait of Hormuz crisis is all completely over now. No need to worry about it. But there you go. Sorry, I must have missed that memo, but there you go. I'll tell you one thing, though. My personal view on this is, if someone does play silly buggers and this ceasefire does fall apart, Trump's going to feel his ego is going to be very bruised, because he's living the life right now, thinking he's solved like this whole issue that, it's an issue that he called.
Well, he's back in the running for the FIFA running now, isn't he?
Well, quite. If that still goes ahead. But what I will say is, if this does all fall apart and we start seeing, say, God forbid, a ship's attacked or something as it's transiting, I think Trump could put on the gloves again, and it could get far worse than it has been so far.
Yeah, and that's obviously a risk that we need to remain aware of. And obviously, we had Trump on Truth this morning saying that all military personnel will remain within the region until an agreement is reached and complied with. Again, a few people were kind of reading too much into that. I don't think that's particularly surprising. You don't ship half your Navy and Air Force to the Middle East and then send them home on day 2 of a ceasefire before you've actually agreed anything. But again, it is that I think the big risk now is obviously re-escalation. Because, as you rightly say, you kind of, we're not military strategists, of course, but you would assume that any re-escalation would likely be to a much, much higher level than we saw before things kind of died down a little bit over the last couple of days.
Yeah, no, exactly that. And I think this is another thing as well. It's, we're seeing a lot of, trading desks, like institutional trading desks, now kind of re-up their S&P forecasts, which is kind of what you'd expect to see. There's a lot of people calling the low is in for stocks and stuff, which hopefully, fingers crossed, it is. But it's one to be careful and, one to watch. One thing I would note is, at first people were saying that, if kind of the strait was open soon enough, it'd be very much a temporary blip in inflation numbers, or it might not even really register. I think we are beyond the point of no return there. I think there's enough backlogs, there's enough issues now going on that, it's going to, even if the strait opened fully magically tomorrow, there's going to be inflation kind of like going down the road for a little while now. Like we're seeing, I think Reuters put out a video report this morning about a region in China, plastics region in China, with just like prices absolutely screaming higher because obviously, guess what? Plastics made out of oil. So all these things, it's all going to start filtering through, which again, I think is one thing that central bankers specifically will be looking at. Will that impact stocks? Your guess is as good as mine. One to keep an eye on.
What I would say on that, though,
go on,
is, I agree. We are, we've had 6 weeks of relatively high energy prices and all the rest of it. That's obviously got to make its way through the value chain. I think if you see energy prices now beginning to fall, it may give central bankers a little bit more confidence to actually look through the rise in headline inflation that we're going to see, simply because they know that it is more likely to be temporary, because you can just call up wherever Brent's trading or nat gas is trading and go, well, it's 20% below where it was 3 months ago. So I do agree that is something that's going to happen. It's still this idea of second round effects that's going to drive the policy response.
Well, I tell you what, so Rory Johnston put out a really good, again, I know I've mentioned him a few times, but really, really top bloke, as in just a nice guy and also very, very knowledgeable. So he put out a good piece, a good note yesterday, and just said a real ceasefire that partially reopened the Strait of Hormuz, even under suboptimal conditions and effective Iranian control, would be a godsend to supply parched markets on the edge of breaking and would spare considerable economic and human misery. A fake ceasefire announcement meant to placate markets actually worsens the long-term consequences of the crisis by delaying more durable adjustments to ongoing shortages. And the Strait of Hormuz remains closed, technically for now. I think that's spot on. Is this just a ceasefire by name, but nothing really changes? In which case, we're not in any better position than we were, even if they're lobbing missiles at each other. Let's be honest. But let's try and get away from Middle East for a second. What else is going on today?
Yeah, exactly. We do have a few bits and bobs on the data docket today, although I must stress I don't think any of it's going to be particularly market moving. There's nothing out during the European morning, so it's going to be very much a few hours of headline watching for most desks here in London. Into the afternoon, though, at 1:30, we do get a few releases out of the United States. First things first, we get the final read on fourth quarter GDP. That is expected unrevised, pointing to growth of 0.7% on an annualized quarter-on-quarter basis. Do bear in mind, though, that that is, of course, skewed lower by the government shutdown that we had at the back end of last year, and it goes without saying that that is very, very stale at this point. We also get the February read on PCE from the United States at 1:30, including the core PCE deflator, which is the Fed's preferred inflation metric. This data, though, is also very stale, and of course, this comes ahead of the March CPI figures, which are due tomorrow lunchtime, and that will, of course, give us our first read on how the rise in energy prices is impacting the inflation outlook in the United States. And also stateside today, we get the weekly jobless claims numbers. Initial and continuing claims both set to remain relatively low at 210,000 and 1.83 million respectively, and neither of those prints pertains to the April non-farm payrolls survey week. Besides that, there are no central bank speakers due, no notable earnings, but we do have a 30-year Treasury auction at 6 o'clock this evening, and that will come after what was actually a pretty solid 10-year auction yesterday. Yes, it tailed the when issued by 0.2 basis points, but in the grand scheme of things, that is not too shabby, given how, well, the market has suffered from a bit of indigestion in terms of Treasury supply of late. So I don't think we can have too many complaints about that. But of course, geopolitical events are going to be the main focus as we move through the day ahead.
Indeed, indeed. And if you can get out and touch some grass and get a bit of sun on your face, do so. Market's on.
Indeed, it's looking like another lovely day out there.
It is, it is. I'm going to add to my base tan / burn. But yeah, there we go.
I'm off to buy some Factor 50 in boots.
get
Other pharmacies are available.
Get some Dulux emulsion on you, that'll do you. Michael, pleasure as always, my dear friend. Listeners, thank you so much for tuning in.